Welcome to Talk Tickers, where we break down the earnings calls that are really moving the markets. Today, we are diving deep into Ericsson's absolutely explosive Q4 2025 report. And let me tell you, this wasn't just another set of numbers. It was a huge signal to investors that something fundamental has changed. So, let's get into it.
And wow, did the market react? I mean, the response was immediate and powerful. Ericsson's stock just shot up over 12% right at the opening bell in Stockholm. A move like that, well, it tells you one thing, loud and clear. This report was a total game changer.
And the results definitely did not disappoint. Ericsson delivered what you can only call a decisive victory, crushing what analysts were expecting on both revenue and profits. This really set the stage for a super bullish earnings call.
Okay, let's start with the bottom line, the profits. Ericsson reported earnings per share, or EPS, of 27 cents. Now, that is a full 17% higher than what Wall Street was penciling in. A beat of that size? It's just a crystal clear sign of underlying strength.
And the top line, the sales, just as impressive. Revenue came in at $7.36 billion, beating expectations by almost 5%. But you know, the real story here is that 6% organic growth. That tells us the core business is absolutely firing on all cylinders, even when you factor in pesky currency fluctuations.
But look, those headline numbers, as good as they are, they only tell part of the story. To really get why the market got so excited, we have to go deeper. We need to dive into the margins, because that's where Ericsson's operational excellence is truly on display. Just take a look at these numbers. The adjusted gross margin jumped 1.7 percentage points. That's 170 basis points for all you finance folks, all the way up to 48%. And the adjusted EBITA margin, that's earnings before interest, taxes, amortization, well, it surged by 4 full percentage points. This isn't just a small step up. This is a massive leap in profitability.
So what was the secret sauce here? How'd they pull this off? Well, it was really a combination of a few key things. First, some really aggressive cost-cutting helped streamline the whole operation. Second, they sold more of their high-margin stuff, especially in that cloud software space. And finally, they had this laser focus on efficiency that just squeezed every last drop of profit out of the business.
And you want to know the best part? These incredible profits are turning into cold, hard cash. Ericsson generated a staggering 15 billion Swedish kroner in free cash flow. And that, my friends, is the fuel that's going to power the company's growth and, of course, returns to shareholders. And that brings us perfectly to the next chapter of this story. What on earth did management do with all that cash? Because, as we're about to see, they made a super bold move that pretty much signals a whole new era for Ericsson.
Which leads us to the big question everyone on the call was asking. With such a strong financial position, what was the very next move in their playbook going to be?
And the answer was a bombshell. Management announced a double whammy. Not only did they increase the dividend, but they also announced the company's first-ever share buyback program. We are talking about a massive 15 billion kroner plan to return cash directly to shareholders. This is, without a doubt, a historic moment for Ericsson. And the CEO, Georgia Eckholm, he drove this point home himself. He called it the largest shareholder distribution in their entire history, framing it as a direct reflection of the board's supreme confidence in their strategy. This wasn't just some financial decision, it was a powerful, powerful signal.
So, with this absolute blockbuster of a quarter and a historic buyback, you'd think it was all smooth sailing from here, right? Well, not exactly. As we're about to see, there's this really fascinating tension between the market's pure excitement and management's much more cautious tone.
Okay, let's break that tension down. On one side, you have the market, right? And it is laser-focused on the incredible margin performance and those immediate cash returns. But on the other side, you had management on the call, being very careful to flag external risks, things like tariff uncertainty, macro headwinds, and the slow pace of regulatory changes.
And that right there is the key takeaway. Despite management's caution, the market's verdict was crystal clear. By delivering on their promises and just executing flawlessly, Ericsson's leadership earned a massive dose of credibility. You could call this quarter their credibility print.
So where does all this leave us? Let's pivot to our forward-looking view, the next call. Here's our take on the stock, the key things to watch for, and of course, our official rating.
First, just a super quick definition for you. When we say outperform, we simply expect the stock to do slightly better than the broader market. It's a positive view, but not, wildly bullish.
So what's the one number you absolutely have to watch next quarter? It is all about the network's gross margin.
Management has set a really high bar for themselves, and hitting that target is going to be the next big test of that credibility we were just talking about.
So, to put it all together, here's our investment thesis. We expect Ericsson to deliver on its guidance, proving that this new, higher level of profitability is here to stay. And with that massive buyback program kicking in soon, we see a powerful, tangible catalyst for the stock. And that's exactly why we're initiating our coverage with an outperform rating.
And finally, a very important note. This has been our analysis of Ericsson's earnings, but of course, it is not financial advice. Please be sure to do your own research before making any investment decisions.